It is not at all correct that, just below 12 lakhs, I don't file the tax return because I am not required to pay any tax. No, it is not correct. Depositing money directly from Indian sources to NRE account is almost impossible. You can deposit any money which you have earned outside of India to that NRE account. Non-resident ordinary means it's quite simple. It is for any non-resident, he can maintain this account ordinarily in India. PIO means at least 3 generations backwards, his roots should be there in India.
I'm sure you've simplified this concept so well for us. Like, I'm sure all the audience are never going to forget the difference between NRE and NRO. Welcome to the Vikasit Way, a one-of-a-kind podcast series brought to you by Vikasit Vidya and co-presented by our compliance partners, Ease My Compliance, where we recognize and bring to you the success stories of coastal Karnataka with our special episodes every month. This episode is especially brought to you by our goodness partners, Achal Cashews, bringing you hygienically packed dry fruits and nuts since 1981. I'm your host, CS Swathi Baliga, and today we are diving into a topic that concerns lakhs of Indians living abroad, and that is NRI taxation. Whether you're earning in Dubai, investing in Bangalore, or selling property in Mangalore, one question never leaves your mind: do I still have to pay tax? We have with us one of the most renowned tax experts from coastal Karnataka, CA Sriram V Rao, partner at Nitin J Shetty Co, Chartered Accountants, Mangalore. He is renowned for his expertise in international tax planning and NRI taxation. And moderating this conversation is CA Gaurav R Hegde, partner at AR Hegde Co, Chartered Accountants, Mangalore, who also works very closely with NRI taxation. So welcome to both of you to the Vikasit Way.
Thank you, Swathi. Sriram sir, it's indeed a pleasure to have you with us. Let's dive into the podcast. To begin with, one of the most fundamental questions that all NRIs have: when exactly do they become non-residents? More than NRIs, when do they become non-residents? And should they go through the Income Tax Act or the FEMA Act?
Okay, to answer this question in a very simple manner, one need to understand that there are 2 laws now, basically, which are applicable for determination of non-residency. One is FEMA and one more is income tax. Both have diversified intentions in their enactment, both acts in fact. The income tax is basically looking at what income to be brought to tax. To that effect, one needs to see whether they are resident or non-resident, and based on that, what income can be brought to tax in India. For that residential status under income tax has to be determined. This is a must. But when it comes to FEMA, the intention is a little different. The FEMA is guided by RBI, Reserve Bank of India, as well as the main intention of FEMA, full name is Foreign Exchange Management Act. This is to manage the foreign exchange. That means cross-border transactions, the transaction per se. For that purpose, what is the residential status of a person? That becomes important. So, the rules sometimes seems to be sacrosanct, saying that 182 days, number of days stay, etc. But it is not so. And there is always a possibility that one person can be a resident under FEMA and non-resident in India, and resident under income tax and non-resident under FEMA. This is possible. So, for what purpose you are looking at your residential status, that determines which act you should look into and which provisions you look into, right? So, from that point of view, if a person wants to determine their residential status under Income Tax Act, it's quite simple rather. 182 days number of stay, that needs to be seen in India and in a financial year, starting from 1st of April to 31st of March of subsequent year. So, that period, if stay exceeds 182 days, then he becomes a resident in India, and based on that, there will be taxation. If number of days stay is less than 182, then there is a possibility that person may become a non-resident. This is how the rule goes. Again, there are multiple rules. 60 days during the year stay can also make a person resident in India, but that will be coupled with the 365 days during preceding 4 years. That is a stay one should have. Only two conditions, both these two conditions satisfied, then he becomes a resident, otherwise he becomes a non-resident. Further, there are multiple rules like person becoming a deemed resident. That case, a person even not having been resident or stayed in India for even one day in a financial year, he may become a resident in India, right? So, Income Tax Act is very divergent. So, it is basically states who is a resident in India and then says if you are not resident, then you are a non-resident. This is how it goes. But when it comes to FEMA, it is something different. It is more of an intention, right? A person, there is also a number of days to be counted, but it is like during the preceding year. That is, if you want to calculate this financial year, 25-26, what is the residential status under FEMA? One need to look into 24-25 financial year. In that, what is the residential status? What is the number of days the person has resided in India? There is a significant difference. 182 days residence or residing in India during preceding year, he may become a resident in India during this financial year. I said he may become. Why is that? Because there is also intention coupled with. For example, the person is leaving India during this year for the purpose of employment outside of India. He got a new employment outside of India, or he wants to set up a business outside of India, and for that purpose he is leaving. Or there may be some people who wants to go to some country for being a resident of that country and leave India to stay in some other country for an uncertain period. It may be somebody like a person who is leaving India, like a retiree maybe, their children are outside of India, so they want to settle with them for their retirement life. So at that time, from the day they left India for that purpose, they may become a non-resident in India. So it is very subjective. We need to see fact and circumstances, right? At the beginning I said the intention matters. Now FEMA residential rule, why it is required? It is required basically to, when you are transacting money, either inward remittance or outward remittance from India or to India, like that it is. I want to transfer money from India to outside of India, or I want to get the money to India for some purpose. At that time, residential status of under FEMA is a must. And also, since FEMA is regulated by RBI guidelines, FEMA also states that a person who is a resident, what kind of bank account he can maintain, or at the same time what kind of bank accounts a non-resident can maintain. It is totally different, right? So for that purpose also, residential status under FEMA is a must to be verified.
That's wonderfully explained, sir. Thank you so much. So that brings me to the next question, which is, as you mentioned, the bank accounts to be maintained. Now, famously, like we know that there are two main bank accounts, NRE and NRO account, that most of them have. So what is the difference between this NRE and NRO account, and whether your ordinary SB account needs to be converted to NRE and NRO account mandatorily? So what are the consequences of not doing it, and what are the documents to be submitted?
See, the thing is, if a person becomes a non-resident under FEMA, then he is eligible to maintain in India as on date only three types of bank account. One is NRO, another is NRE, another is FCNR. Only three types of bank account, no other, right? If he is a resident now, tomorrow he became a non-resident under FEMA, that is quite possible. At that time, on the day or immediately as soon as possible from the day he became a non-resident, he must intimate his banker and convert all his resident type of account to NRO account. it is not possible for a person to convert a resident account to NRE or FCNR. He can only convert it to NRO. Once he converts it to NRO, he wants to open a fresh account under NRE kind of type of account. That is quite possible. Now let me come to the difference. Now NRE and NRO account, the name full form is something like non-resident ordinary, non-resident external. Non-resident ordinary means it's quite simple. It is for any non-resident, he can maintain this account ordinarily in India, right? For which any deposits from India can be made. Okay. At the same time, deposit from outside of India, whatever he has, some salary income, whatever it is, he can deposit that to NRO account. That is quite possible, NRO, right? But withdrawal from that account, that means either for some payments or expenditure, debit card swiping, whatever it is, or check payment, it can be done only for a payment within India. So if he wants to go to outside of India and use that money, it will not be possible for him to do that, right? This account is maintained basically for the purpose of the person who wants to deposit Indian money into that account for that and use that money within India generally, right? When it comes to NRE, non-resident external, it is as good as outside of India. That means even though it is maintained with an Indian bank, the money is as well as good as outside of India. So that means if you can deposit any money which you have earned outside of India to that NRE account, depositing money directly from Indian sources to NRE account is almost impossible. There are exceptions, right? There are exceptions, but it is not possible in general terms. Some with some restrictions, under some condition it may be possible. Now NRE account, if the money is there, that the deposits are always almost from outside of India sources only. Once it is there in that NRE account, you can spend it anywhere, whether it is in India or outside of India. You can use it anytime from India to outside of India. If you want to take that money to some other foreign bank account, you can take it. If the money is in NRO, it is not possible. So that is a difference. Again, if the money is there in NRO account, any interest earned therefrom by that non-resident, it is always taxable in India. Whereas if the money is maintained in NRE account, the money interest earned from that fund, that is not at all taxable in India if he is a non-resident as per FEMA. This is the basic difference between NRO and NRE account and who has to maintain that.
But will that be taxable outside India, the income earned on the NRE account?
This is a very interesting question. The thing is, if you are a resident in some other country, then definitely that country will always tax income earned globally. That means in that country and anywhere in the world, even including India. That means NRO account interest also will attract tax there. NRE also will attract tax there. The exemption of interest income earned from NRE is available only in India due to income tax provisions. That is Indian Income Tax Act. It is not foreign income tax. So that's why NRE interests are always taxable outside of India.
I'm sure you've simplified this concept so well for us. Like, I'm sure all the audience, they're never going to forget the difference between NRE and NRO anymore.
So, following up on your points, so one question is there's this ambiguity between 182 days and 120 days for especially our you can say UAE friends, whether that 120 days is even applicable to them, and for our locals who are in employment in India or they were doing some business in India but now have plans to move abroad. So, like you told, they have to convert to NRO and NRE. Are there any other authorities that they are supposed to report to, or tell them ki I'm going abroad and explain about their residential status, or how does that work, or is it at the time of filing their returns?
Okay. Now let me come to your questions. Your question has is actually in two different dimensions. Okay. Now, when you mention that 120 days rule and all, that is entirely under Income Tax Act. That has got nothing to do with FEMA.
Yes.
That means that has not got nothing to do with what kind of bank accounts you can maintain, whether you're resident or non-resident under FEMA. That is nothing to do with that. And authorities generally would be looking more into transaction based things rather than your taxation status.
Correct.
Right. So, for example, the authorities may be the person may be having some mutual fund investment.
Yes.
He may be having some investment in shares. He may be maintaining some demat account. So, to the demat account means it will be with some depository. With them, that person has to report and change his residential status to non-resident, right? And this residential status with the authorities will be basically from the perspective of FEMA rather than Income Tax Act,
Got it.
right? So, from the perspective of FEMA, if you are a non-resident, then you report to them. And when you convert your bank account, at that time also you have to tell them that my mutual fund investment and my this one shares investment, etc., that has become now an investment made by a non-resident.
Okay.
Right. But that will be still with the repatriation, non-repatriable rules, not with the repatriable rules, right. So, that is a total different thing. Now, if I have to talk about that 120 days, it will take days together, hours together to talk. It's so much is there with that. But if I have to keep it very simple, if a person is leaving India in the year, that year that 120 days rule will not apply to him.
Correct.
Because that year he is leaving India, say for example for the purpose of employment or for the purpose of business or something like that. Under Income Tax Act, he has already got an exemption under some other rule for 182 days stay. If he is not, then he becomes automatically a non-resident. Now, this 120 days stay, to whom it will apply? It will apply only to that person who is already outside of India, right? He has already gone outside of India in previous year and staying there, residing there, maybe in the immediate previous year or earlier years, whatever it is, he has already gone outside of India, he is staying there, and now he is coming back to India.
Okay.
For what purpose he is coming? So, that needs to be seen. If he is coming for the purpose of visit, that means his family members are there, his social gathering is there. So, if he is coming back to India for the purpose of visit, that means there is two conditions. One is he is already outside of India, then coming to India for the purpose of visit. And it is applicable only to Indian citizen and person of Indian origin, right? If a foreign national coming in, then this condition will not apply. Entirely a foreign national. PIO means at least 3 generations backwards his roots should be there in India. It need not be that a person should have an OCI card for that matter, but a PIO can be coming in for the purpose of visit. That 120 days rule will apply. So, when it will apply? Again, only if his India sourced income is exceeding 15 lakh rupees, 15.
Taxable or any source, sir?
No, India sourced taxable income. So, only income which is taxable in India as per Income Tax Act, that if it is exceeding 15 lakh, 15, then this rule will apply, 120 days. So, again this 120 days rule, what it says? If that person stays in India during one financial year for a period of 120 days or more, then along with that he also has to see previous 4 years. In that previous 4 years, his stay in India should be more than 365 days. So, ultimately there are 5 conditions, right? All 5 conditions satisfied, only then that person will become a resident. But again, he will become only a not ordinarily resident. That means the taxation rules for a not ordinary resident, RNOR we say, and non-resident is almost same, except for the fact that if the RNOR is having some business outside of India, or profession outside of India, like us. I am having some profession outside, that income may attract tax in India. If he is not having any business or profession, he is just a self-employed outside of India, then whether he is a RNOR or a non-resident, taxation for that year will not make much of a difference for him, right? So this is that 120 days rule, and it will apply to everyone, whether they are UAE or some other or GCC country or any other country residents, but it is not dependent on anything other than these 5 conditions, that is Indian citizen or a PIO, already outside of India coming to India for the purpose of visit, income exceeding 15 lakh rupees in that particular year. Every year this has to be seen. Number of days stay during the year exceeds 120 days, and preceding 4 years, apart from this year, preceding 4 years, his stay should be more than 365. All five conditions satisfied, then he becomes a RNOR. But whether he becomes RNOR or non-resident, most of the cases it will not make much of a difference.
So to be safe, it's better they stay less than 120.
Yeah,
Or
one can
182,
plan.
looking at their.
Yeah, correct.
So when you were explaining, you mentioned this OCI card.
Correct.
So what is this OCI card and what are the benefits of having OCI card?
See, if a Indian originated person like PIO, 3 generation back, if they are already become a citizen of country outside of India, so at that time, as per Indian law, they cannot maintain Indian citizenship. That means their Indian passport will automatically get converted to that country passport.
Right.
So those people have the option of obtaining a OCI card. So OCI card is a nothing but overseas citizen of India. It is not like he is getting dual citizenship, but it is getting a direct kind of an entry into India without having to get any visa to enter into India. For that purpose, actually OCI card is required basically, right? Otherwise, if a Indian originated person taking citizenship outside of India, maybe his parents taken outside of India citizenship, he is not applied for OCI card and not got that OCI card, then for the purpose of FEMA, he will be considered as a foreign national.
Right.
So if that is the situation, and also for the purpose of Citizenship Act and immigration rules, when he comes to India, he has to take a visa. Otherwise, if he has a OCI card, he can show that at the gate and just enter into India. That is a basic purpose. Apart from that, if he gets a OCI card, then he will be considered as a non-resident individual status, similar to that under FEMA rules. That means whatever the transaction one non-resident Indian citizen can perform as per FEMA rules, that transactions can be performed by a foreign national in India only if he has a OCI card. Otherwise, there will be lot of privileges which is available to non-resident Indian citizen that will not be available to such foreign nationals who are actually PIOs. So for that purpose also it is required. Something like a person who is OCI card wants to purchase some property in India. For that purpose, if he is only a foreign national, not obtained OCI card, then he will not be eligible to purchase properties in India. He has to take RBI permission. But if he is having a OCI card, then he is eligible to purchase properties in India, like that.
Sir, and like how you mentioned earlier regarding informing the authorities.
Correct.
So like it could be your demat holders or your bank account holder, your
Correct.
banks and all. You must have experienced some of your clients telling my PAN has become inoperative. They're asking for Aadhaar card.
Correct.
And most of these non-residents per se, they won't have Aadhaar cards. So how should they?
See, the thing is, when you are talking with Aadhaar card, now there is one more act which is coming in, Aadhaar Act. Now there also there is a residential status, and which is similar to 182 days residing in India and all. So only if a person who becomes a resident as per Aadhaar Act, that is by residing in India for 182 days or more, he is eligible to obtain a Aadhaar in India. That means for every Indian citizens and residing in India, they are eligible and they must obtain, right? So a person is already a non-resident.
Yes.
Then as per Aadhaar Act, if he is a non-resident, then that is he is not residing in India, maybe 20, 30 years down the line, he has not come to India or come very for the purpose of visit, etc. But if he is only a Indian citizen,
Yes.
right, still a Indian citizen, at that time, whenever he comes to India, he is eligible to obtain an Aadhaar card, right? Even he comes to India for the purpose of visit, he is eligible to obtain an Aadhaar card. There is a specific notification in this regard of 2019. So as per that, he is eligible to obtain an Aadhaar card. So for those kind of people, my advice would be to obtain Aadhaar card, link that with PAN and make your PAN operative. That is the easiest and best possible. But he don't want to do that. Okay. Or that person has already become a foreign national by taking citizenship there and obtained a OCI card. They are not actually eligible to obtain Aadhaar in India. But still, they might have obtained the PAN in India before the ages of Aadhaar. So now, because of non-linking of that, there is a possibility that it has become inoperative. It is not that the PAN has been cancelled or this one. The PAN has become inoperative. You cannot do any operations along with the PAN. That's the whole theory. Now, for that, there are certain rules. You just have to write to the concerned jurisdictional income tax officer, providing the proof of passport, OCA card, etc. if you are a foreign national and OCA card holder, and tell them that I am a foreign national, change my citizenship. Technically, change my citizenship in your database.
PAN database.
Pardon?
PAN
database. PAN database. That can be done only by the income tax officer concerned. So it can be, it's a very simple process. You just have to go to your income tax portal and file a grievance in that regard and upload the documents online. So automatically the assessing officer is bound to make that correction. So automatically once he changes the citizenship from Indian citizenship to foreign citizenship, automatically his PAN will become operative.
Got it.
Okay. Same way, if he has become a non-resident, that is also quite possible. Indian national, Indian citizen having Indian passport can become a non-resident. He is also not eligible to obtain an Aadhaar card. He can also apply to change his residential status in the PAN database. Same mechanism. It is a very small, simple process in income tax portal of that particular person. He just have to apply. If the assessing officer changes that residential status from resident to non-resident, automatically his PAN become operative. And all the other activities he can do without linking of Aadhaar to PAN.
Got it.
Sir, I have a relative who works remotely for a foreign company while sitting in India.
Okay.
So he earns his income from abroad.
Okay.
So how is the taxation aspect in this case? How is it being taxed?
That entire amount is taxable in India. Because he is providing the employment services. I am presuming that he is employed, right? He or she, whoever it is. That employment services has been provided by locating himself in India. So automatically India gets the right to tax. And as per Income Tax Act itself is taxable in India. Because he is in India, he is resident in India. So India gets to tax. So he has to pay tax in India. There is also possibility that that country, the employer might have deducted tax at source in that country.
Okay.
And at that time this fellow has to do some verification of the double taxation avoidance agreement between India and that country and see what rules under that DTA says, right, and then take remedial action so that his income does not become doubly taxed income. That means you pay tax there also, here also, means it's a double tax
You'll be left
right?
with nothing.
Yeah, in fact. So for that purpose what he can do is you need to look into that. There may be a possibility that you claim refund in that country for whatever TDS has been deducted, file the taxes there, claim refund, and pay taxes in India. There is also a possibility that you file taxes there, whatever tax you paid there, you claim a credit in India against the taxes payable in India because you are a resident in India.
Right. Is this process easier, the second one?
See, whether it is easier or difficult, that's a different story, but we need to see what is correct. That is again subjective, right? It's different for different countries, rules are different. So it depends on the fact and circumstance, then we have to look into that.
There's another query that we have got, which is foreign employees. They get their salary directly credited to their NRE account.
Okay.
Would that be any threat to them, any possibility of being taxed from the Indian point of view? They are working over there, they are present over there, they are over there for say 200 days.
Understood. See, if you are a non-resident in India and resident in some other country, you are earning salary from there. Generally, first advice from a professional should be to open a bank account there, get the credit of the salary there, and then remit that money from there to Indian accounts. NRE or NRO, that is left to you. First you receive there, then you remit to India, right? Instead, that employer directly remits to Indian bank account. There is a possibility of the tax officer saying that it is taxable in India, but whether it is really taxable, this is a very grey area, but my answer would be no, it is not taxable in India, because of the fact that there are couple of circulars as well as the rules and regulations around that circular, which is giving a clear indication that credit to NRE account by itself will not attract tax in India. It may get taxed or may not get taxed. It only fact and circumstances determine. But if you are a non-resident residing outside of India and you are supposed to pay tax in India, pay taxes outside of India and paying taxes outside of India, then definitely the credits to NRE account will not attract tax in India. That is quite, I can tell that with confidence, I can say, even though it's a grey area.
Now, sir, let's say there's a person who is deputed outside the country for just a project, it's a temporary period of time, and they've been given allowances for travel, accommodation, and all of that. Will that be considered as income? Is it taxable? So, how is that treated?
Now, again, temporary means how temporary? And again, because of that temporary deputation, whether he has become a non-resident in India, all that question will come. So, the allowances, whether it has been given as a part of the salary income or as a reimbursement. Reimbursement is totally different from allowances. So, if it is reimbursement, then definitely not taxable. If it is part of the salary and like an allowance, additional allowance is given for off-site work. So, if he becomes a resident in India, then there is a possibility of getting taxed in India for that allowance as well.
Okay. Another question was, for instance, there's a relative who's abroad and he now wants to send his money to his relative in India for their maintenance or to his parents. Should he directly send it to his father's account or mother's account, or should he first remit it to his NRE account and then to his parents, is one of the doubts.
Okay. Now, here is one more catch. Who is a relative?
Okay.
Right. So, relative can, in some family, even distant relative, we say that relative or family, right? Some joint families, etc. And some families, it is very restrictive. So, we need to see the fact and circumstance. But again, when it comes to these kind of remittances, I have already mentioned that one need to look into the provisions of Foreign Exchange Management Act, FEMA. So, that is giving relative definition by referring to Companies Act. So, if a person is a relative as per Companies Act, to that person the money can come, right? I can pay that
directly.
directly also, or even from NRE to his account from India, or NRO to his account, relative's account in India. But if that person is not a relative as per Companies Act, then that receiving that money will be a violation under FEMA. Because for what purpose it? If it's some payment or something, that is different. But if it's given as a gift or loan, all those are actually prohibited under FEMA.
So there's an NRI who has some investments back home in India. So
Okay.
what is that income treated as, sir? Like, what are the different kinds of incomes that are taxable for NRIs?
Okay. Now, when it comes to taxation of incomes for a non-resident, one can definitely say that any income earned in India. That means if that person is having some property in India getting rental, he is having some investment, or he might have invested in some business and that business is earning something and giving him some profit, or some he has made share investment in shares and getting dividends, or earning capital gain from Indian company share sales or mutual fund sale, etc. All those incomes, even though the monies are sourced from outside of India to Indian account, all that investment is considered as invested in India, earning incomes in India and taxable in India. That means any income earned in India, that will become taxable. If the income is not earned in India, then that will not become taxable for the non-residents. So this is how one need to
It's
verify.
very simple. So if there is
Yeah.
a source of income in India, you're earning an income in India, it
Yes.
is fully taxable in
Yes.
India.
Yes. Unless it is specifically exempt. Something like I mentioned, interest earned from NRE. It is NRE interest is taxable in India, but it is specifically given as exempted
Got it. Yeah.
under the provisions of Income Tax Act. That's why it is exempted. Otherwise, it is taxable. So same way, all these are taxable in India.
Maturity of life insurance.
Yes, it is taxable in India, but there is a specific exemption for certain kind of maturity of life insurance, right?
Yes, sir. So we'll slowly divert to another segment.
Okay.
It's called Unfiltered with Vikasit.
Okay.
So today we'll try to bust some myths that most of the NRIs usually have. There are some assumptions in the minds of many people who live abroad. So we will ask you simple questions,
Okay.
and you can answer in true or false or justify
Okay.
the same.
Okay.
So we will begin, sir.
Definitely.
Yes.
If an NRI income in India is up to 12 lakhs for financial year 25-26, then no tax or no returns are required.
No, it's totally a myth. As actually, if the income is exceeding rupees 4 lakhs, then it is mandatory for anybody to file the tax return. Of course, India is giving kind of a rebate, etc., that has to be claimed by that person by filing the tax returns. So even though his income is somewhere just below 12 lakh rupees, it is he has to file the tax return, and even otherwise it is tax advisable for him to file the tax returns, because he will get most of the other benefits, because some of the deductions, some of the benefits can will be available only if he files the tax returns. So it is not at all correct that just below 12 lakhs I don't file the tax return because I am not required to pay any taxes. No, it is not correct. And again, in respect of non-resident, this rebate is also not available. So that is totally incorrect for the non-resident not to file the tax returns in India.
Similar to rebates not being available, when they sell their land or
Correct.
building,
Correct.
is indexation available to them like how it's available to
No,
us?
earlier it was available, but now it is not at all available. Okay, and more of that, I would say that it has become simple and tax rate has been reduced. There are some unfortunate situations where the total amount of tax payable may increase, but most of the cases that we have seen so far in last 1.5 years, the quantum of taxes payable in those in the hands of those non-resident, that has reduced in most of the cases.
Okay. So now just find out how much their profit is on the sale
Yes,
and
it
pay
is sale
12.5.
minus cost, no indexation, sale minus cost. What is the capital gain? Pay 12.5% plus such and cess as taxes. Close it off. It's quite simple, but again, it needs to be seen from factors and components.
For all the viewers, indexation is a benefit given to property owners basically, wherein their cost of acquisition, say they had bought it for 1 lakh rupees in financial year 2001, which is way back now, 25 years back. Government says that you can, or more than government, income tax act says that you can index the cost. Instead of showing 1 lakh, there are index rates for each and every financial year. You have different index rates. Accordingly, you can multiply it into that index rates with your base year and increase the cost of acquisition, thereby reducing your taxable profit. But when indexing, the capital gains tax rate is different, and without indexation, that capital gains tax is different. But for NRIs, there is no more such calculations. There is no indexation at all. Third question, sir. Interest earned in NRE accounts is always exempt.
Not really. Not really, but generally yes.
Okay.
I would say interest earned by non-resident account is generally exempt in the hands of non-resident as per FEMA.
Okay.
If the person has become resident as per FEMA,
Okay.
but non-resident as per Income Tax Act, still the interest earned from NRE account will be taxable in India, because exemption for interest earned from non-resident NRE account is eligible to be claimed only by a person who is a non-resident as per FEMA.
Okay.
It's something like this. 182 days stay is there.
Yes.
25-26 financial year. That person has stayed in India till say November. In December, he is leaving India for the purpose of employment. On that day, he is eligible to convert his NRO account to NRE account, ordinary resident account to NRO account, and open a new NRE account. So, he might have earned some money outside of India, he deposited that in NRE account in January. January, February, March, he earned interest, right? He is a non-resident as per FEMA, but because of number of days stay which is exceeding 182 days, he will be a resident in India. In that year, even though he is a resident in India as per Income Tax Act, he is eligible to claim interest earned for that 3 months period, January, February, March,
Okay.
as exempted in India, because he is a non-resident as per FEMA. It can be a reverse situation also. Even a non-resident as per Income Tax Act, but resident as per FEMA will be liable for payment of taxes on interest earned from NRE. These are very extreme positions, but it is quite possible.
Yeah. Say in the month of January, he has come back to India for good.
Yes.
So that was an enlightening session with you, sir. I'm pretty sure a lot of myths have been busted, a lot of clarification is sought from many of our viewers. So thank you for being with us today. So as we come to the end of part one of this podcast, sir, could you share a checklist or some quick tips for our NRI viewers that they have to ensure every year?
See, one thing is you be compliant. So, to be compliant, from whatever knowledge I have, I would say that from income tax perspective, there will be certain compliances requirements, like filing your taxes, and looking into your PAN status from time to time, complying with whatever the requirements under FEMA, Income Tax Act. For example, if there is any notices which have been generated, just reply to that in a timely manner. So, all those things. And again, under FEMA, you should not be opening or carrying out certain transactions which are not allowed or prohibited, because ultimately, if you are not filed the taxes or evaded or tried to without unknowingly, if you are not filed the tax returns or not paid the taxes, ultimately what can happen? Some tax amount and again interest, some penalty, which normally will not exceed the total quantum of transaction. So, ultimately your capital will not be eroded. But whereas FEMA is concerned, if you violate FEMA, then there is a possibility of attracting penalty up to 300% of the amount involved in such violation. So, it is more than the amount of capital that you have, they may take out as a penalty. So, that is not at all advisable. So, you have to get proper advisory as far as FEMA is concerned, especially non-residents purchasing agricultural land, plantation property. That is not at all allowed in India. It's entirely prohibited. You should not do that. Even if 10 years, 15 years down the line, authorities come to know about that, they may come behind you and tell you to pay the penalty on that. There is no time limit as such, as it is there under Income Tax Act. They can go back any number of years. So, those kind of things. So, again, the maintenance of wrong bank accounts, NRE, NRO bank accounts, or not changing your residential status under for your investments in India, like your shares, mutual funds, demat accounts, so on and so forth. So, all these things has to be done by them. So, those things they have to look into.
Got it. Yes. Thank you so much,
You're
sir.
welcome.
It was a wonderful session. So, viewers, this is the end of part 1. We will be back with another part to continue this conversation with CA Sriram V Rao and CA Gaurav R Hegde to understand more about NRI taxation. Stay tuned till the next month.